if you're a business owner, CFO, or strategic HR leader in getting into the renewal season this year, and you're completely frustrated and just fed up with insurance premiums just to continue to go up every year with little transparency, you're not alone. A lot of folks that I talk to, they really don't understand that in a PPO network, kind of start from the beginning, that there's the dirtiest little secret out there in this business is there is a huge variance in PPO pricing from one network for the other. And employees, when they're given that medical card at the beginning of the year, it's basically like an unlimited credit card to go use. And we don't do that in any other part of our business. So that's, I think, one of the biggest problems in if you are fully insured is you're giving that unlimited credit card out every year to your employees, and they really don't know how to navigate fair price and quality because there's very little transparency in the fully insured network plan designs. So what I want to do today is really just get into benefits captive. I think it's a great way to help with this, and it's a great way to really start to get transparency, and it's just another way to transfer risk. Because some of the meetings that I have, we talk about, these big carriers and the color of the card and these people that need to be in network. If your premium is $1 million or $2 million and you're facing increases of 10% every year, pay for that doctor in cash. Like, I want you to be more profitable, but I also want your employees to have more disposable income. And so I think for looking at what benefits captives are, what they really stand for, it's really just a group of like-minded employers that band together. They create an insurance company with better terms and conditions. So on that fully insured side, on that self-funded side, you have these components of stop loss. You have contracts with no new lasers. You have ways to optimize your healthcare plan. So when you do become self-funded, a dollar saved is a dollar saved, and you're able to access that transparency to find providers at a lower cost with also better quality. So I think that's what we're really trying to accomplish when we're looking at other types of risk finance, like benefits captives. I was in a case in point, was in a renewal meeting a few weeks ago. It was a much different type of meeting. They moved into a benefits captive 3 years ago. And prior to that, they were with a local fully insured provider. Renewal process, pre-renewal process was typically the same. Come out, say, hey, here's what's coming down the road. Looks like you're probably going to get a 14% increase. And the business owner would look across the table. Hey, we're not going to do that. We're not going to take that. Go back and negotiate, see what you can do. And really, from that standpoint, brokerage shopping the market or asking the insurance carrier to, hey, let's cross our fingers. Can you get that on to a single digit increase? That's not feasible either. So this was a much different type of renewal. We had two financial underwriters and an actuarial team that were looking at fully insured versus self-funded benefits captive, which they happen to be in. And the whole time we were going through this report, there really weren't any questions because there were decreases in the per employee per year PPM charges, and everything was trending down. And I was able to ask the business owner at the end of the meeting, what life is like now. And he's like, it's much different. I don't have to reach across the table and shake somebody and say, hey, why are the insurance rates going up? We want them to come down. So I also think it's really efficient too. We were able to look at the increase that was provided from the fully insured carrier a few years ago and just trend against that. So we weren't shopping the marketplace anymore. We knew what trend was, and we knew that we didn't have to go out to market and take a look at those things. But we were also able to show the feasibility of fully insured versus a self-funded benefit captive type plan because we had an actuarial team and financial underwriters backing us, and we're able to create financial dashboards. We're able to look within a data warehouse and know what was coming with claims. So to kind of wrap this up, I think benefit captives are a great way for those fully insured groups that are kind of fed up and frustrated with how renewals have gone. The first step is just, hey, let's start to have a conversation about it. Let's get a quote. Let's get an AI quote. Let's see what your risk looks like. But it's also for those groups that are self-funded. We've seen the reports. Some of these high-cost claims are coming down the pike. So a benefits captive could be a great way for a self-funded group that is a little bit concerned about the volatility of claims coming, that may want to have those conversations and take a look at what type of protections a benefits captive could provide too. So hopefully this was helpful. Obviously, if you have any questions, feel free to reach out. I will include a lot of this in the benefits newsletter that is coming out this week, but happy to help, would love to help in any way that I can. Thank you.